All right. Hello, everybody. Thank you for joining us again. My name is Randy Smith. I am your VA friendly agent with Keller Williams Smoky Mountains here in East Tennessee. Our office is located in Sevier County in the heart of the Great Smoky Mountains. And I am partnered up with Mr. Don Warren today from Southwest Funding, who I personally consider to be a go-to expert on VA loans and their benefits. So I asked Don to join me today. I had the pleasure of taking his military relocation professional. I guess that's a
Or
certification,
it is a
right?
certification.
So I took that class with Dawn back in November, and a topic that came up during discussion was utilizing your VA loan benefit on a multifamily purchase or the purchase of a property that has an ADU, an accessory dwelling unit. I get tongue-tied, so I have to slow down and say it. So Dawn, help us out. And I will tell you, for all of you listening, that was a first for me. I hadn't heard. I knew FHA and VA didn't love purchases with two dwellings on the property. I knew there were some hurdles to get through there, but certainly have not experienced that type of transaction as yet in my career, as well as I truly had no idea that the VA loan benefit could be used on that multifamily. So if you would help us understand those, Don.
Wonderful. And thanks for having me here. This is actually a very, very interesting topic because there are just certain life events on there or certain goals that someone may have. I mean, especially in today's economic world, it may be something as simple as okay, I've got my family, but I need I want my parents to live here, or I want my adult kids, to live here, or it could be multi generational. Now I'm doing the
Right,
tongue
right.
twisting, uh, and that is not so uncommon. Well, hey, we all love having our own little space on there,
Yes.
but also another good reason for this as well is, hey, I'm striking out. I want to start having some rental income on there. How can I do that? Well, the VA allows for this on there. There's a couple of structure types, a couple designations on here that really allow for that. One, let's just talk about multi-unit. What's a multi-unit? We've got the single family home. Hey, everybody understands that on there.
Right.
I think so. But also we've got the multi-unit. The VA allows for up to a 4-unit property. And traditionally, I know for me, I think, okay, if it's a duplex or triplex or quadplex, it's generally all one building on there with separate living areas. That's the traditional. But hey, it can be actually detached from each other, but all on one parcel of land.
Okay.
So it's all in how the appraiser determines it for the highest and best use.
You.
So the multi-unit is okay. You got the 2 to 4 unit. Hey, it could be let's just use the attached. That's all one building on there.
Okay.
Let's use that. Well, a veteran can buy it, live in one of the units, rent out the other unit or 3 units
Right.
on there, and therefore paying his mortgage on that. Now, as far as whether we can use the other units as qualifying income, yes, it can be done, but there are certain qualifying factors on that would be considered with that if we're going to use those that potential rental income on unit 2, rental, unit 3, unit 4
Right.
on there. Generally, it's 6 months of reserves for each additional property.
Oh, I
that they need
see.
to have, that is their own funds on there. And then, do they have a history of being a landlord? Or one thing that can be done is they can hire a property management company. Therefore, they can be buying their first home,
Mhm.
not have the history, but if they have enough saved up on there, we can use the qualifying income for units 2, 3, and 4 to help them even qualify for the loan.
Interesting. Okay.
So that, that is a possibility. Here's something else on here is accessory dwelling units.
Mhm.
Well, accessory dwelling units, and I'm going to read this directly out of the VA guidelines on here, but it's an accessory dwelling unit is a living unit that includes a kitchen, a sleeping area, bathroom facilities added or created within a uh, single family dwelling. So it could be
Okay.
inside the home or attached to the home or detached on the same site. So it could either be part of the current home, created out of that home
Okay.
for that, or it could be something that is detached. And for example, like on detached, hey, you've got a brick, brick home or stick built home. Well, if you have a manufactured home on the property, that can be considered an accessory dwelling unit. Also, the main home and the accessory dwelling unit, whether
Hmm.
it's part of the home or whether it is detached, is going to be uh, it has to be kind of a single real estate entity. Basically, it's all on the same property,
All
one
on one
parcel.
parcel. Okay.
Right. So the appraiser is going to look at what is the highest and best use of anything with multiple homes
Hmm.
on the property, because it can be considered an accessory dwelling unit, or it can be, even if it's attached, it's considered a multifamily. Say that you have two manufactured homes on the same property. Hey, they're both double wide. They're all, they're similar. Uh, or the same thing for homes, same square footage and everything that appraisers consider. Well, if they're pretty much kind of the same, then most likely it's going to be considered a multi-unit. Otherwise, if the second is then it is kind of a lesser than,
Mm.
say, a stick built home, 2,000 square feet, and you got manufactured home 1,300 square feet. The manufactured home is probably going to be considered an accessory dwelling unit.
Versus multifamily.
But it is, yeah, but it is up to the appraiser and how they determine that. But you know what? It can be done. Realtors who are doing the comps and everything, y'all are already figuring out a lot there, and we'll probably already have a fair value on it. The
Hmm.
appraiser is just doing kind of double checking what the legal determination is on there. So there's a couple different things. You got the multi-unit, you got the accessory dwelling unit,
Right.
but whether those extra units are used for family, whether they're used to rent out, use it, mother-in-law suite, whatever on there, it's an opportunity. You buy a home with a second, third, fourth unit on there, or accessory dwelling unit, to be able to do whatever you want to with that, and
Okay.
build a rental empire, or have all your loved families, and they're all together and have the grandkids there,
Right.
however you want to do that. But it can be bought with zero down payment, zero monthly mortgage insurance,
Love
and if
that.
you're renting it out, most likely you're more than paying for your mortgage and payment, your mortgage payment, and it's not coming out of your pocket on there. Of course, you want to have the savings there just in case,
Yes.
and that you protect yourself, put yourself in a good position.
Well, that sounds great. It seems like, and I hope I'm not muddying the waters here, but it seems as if, am I correct in saying if they were to tag the purchase as having an accessory dwelling unit, an ADU, that let's say it wasn't considered livable, or it wouldn't or maybe it would need, I don't know, a new HVAC system, for instance, for heat. At that point, what happens?
Again, that's going to be up to the appraiser to determine what
Okay.
the minimum property requirements are. Sometimes they're going to be easily seen, as that, hey, it's not going to meet minimum property requirements.
Yeah.
It may be something that is just at that point just kind of considered as a detached building or something, and it's going to be used for storage on there. Not brought up. That is something that's probably also going to be, the buyer's going to have to consider as far as how are they going to use that property, because it may be something where have to kind of remove kitchen items on there to where it's not usable. We've had that happen before.
That's what I've heard about before in other other agents sharing, transaction stories and that sort of thing. That's exactly what I've heard: removing kitchen cabinets, sinks, removing toilets, for instance, so that even though it looks like a manufactured home from the outside, when you go in, you truly have made it uninhabitable.
Right. So that would be just something as really, what does the buyer want to do with that? And some are so far gone anyway on that. It's probably better for the seller to just go ahead and take that proactive measure on there and go, okay, we're gonna do this on there. We're gonna remove this so it's not considered an ADU. They're taking away that ability, and sometimes it's something that, hey, that's not considered in the value at all, and it's pointed out to the appraiser anyway on there.
Mhm.
Hey, this is not being considered. I don't know if it's ever gone extreme of, hey, remove this totally. If it's something that's just totally unsafe, then it may be something that is required by the appraiser on there. Really, those situations are rare, though, and it is a situation where, again, and as we talked on a previous video, we're all part of a team. So even as a listing agent, be proactive on there and do that. VA buyers on there, so go in and take a look and go, what is it that you intend to do with that, so that we know how to properly present that to the appraiser.
Mm-hmm.
And to do that, because also, and we'll get into this on another, and this is a great lead into another topic, is renovation loans, what can be done with renovation loans. So these are just all part of going in, taking a look around and going, okay, hey, we already have this building here. Can we, and it was previously a good manufactured home, and we use that, but it could be a stick built home, it could be anything. How do we need to treat that, especially for the loan purposes, evaluation, minimum property requirements and such, and we'll also get more into, I'm sure, minimum property requirements on there, and how awesome it is with certain things. But a lot of this with multi-unit or ADU, how things are classified, a lot of that is up to the appraiser. Again, most appraisers out there want to hear and understand from that. We're not trying to influence value. No. I think we're just trying to see how we can, what needs to be done to make it work for that loan product on there. And by understanding sellers, by understanding all this as far as what they can offer, it also opens up to not just what some people think is cash conventional, but offer, offers up to the client pool to VA. And we're using that one, but yes, FHA, USDA, because of just understanding of what can be done with those loan products. Yes, we're talking about veterans here,
Yeah.
but a lot of these things can also apply. But veterans, it's a great way to build wealth
And
by
that's an excellent point for sure. I mean, when you buy your first home, any home, whether you've had to move and it's your second purchase or, whatever your circumstance may be for any individual, you have begun your journey into building your personal wealth via real estate. And there are so many amazing avenues. And so I just want to come back and reiterate what you said early on. So if we have an active duty personnel member or a veteran who is looking at a duplex, maybe it's a single individual, maybe it's a married individual, and when they are out to sea or overseas for some sort of a deployment, they just don't want their family to be by themselves, whatever the circumstance may be, that duplex, triplex situation may become very appealing. And as you said, that becomes that step into building that real estate wealth. But it seems like the most important piece that our folks need to understand, the borrowers, the military personnel, is that they must live in one of those units as their primary residence. Is that correct?
that is when going, when getting a VA home loan, that is for primary residence. And generally speaking, a rule of thumb, and it's not a hard and fast rule of thumb, plan on, the intention needs to be to live there for at least a year as your primary residence on there. But yes, there's job transfers, there's divorce, there's PCS orders on there. So you can make your determination of from the beginning. You can go, okay, I'm buying this 3-unit property. I'm going to live in one of the homes for at least a year, and then I'm going to go buy a single family home, or I'm going to go buy another 2 to 4 unit property or whatever, even in the same area. But whatever your motivations on there, to continue, to build wealth. But you're now, after you've lived there for a certain period of time, generally speaking, you can then rent that out. So you're getting income from all. So you're building additional on there. You're also gaining that landlord experience. You're doing that. And I've talked to now veterans, but service members who will have say, purchased their first home when they were in the military out in North Carolina. And that home is still being rented 15 years later. 15 years later, and they're living over in West Tennessee now on there. This is one example, and he's into his like a 4th or 5th home on there, and he's been able to build up, and he's got a property management company that takes care of that home for him. It's just one home, but hey, you move around. It depends on what everybody's situation is.
That's right.
This is where talking to a real estate professional, veterans, yes, the MRP certification that Randy has, it's military relocation professional. However, that's not just for active duty, that's for veterans as well. So those realtors like Randy who have that certification really understand a lot more about what goes into your needs on there as a veteran, as an active duty service member on there, and can take a look at things of, okay, let's discuss, what are your intentions, whether to rent or buy, or, hey, listen, you may have had the intention of buying and staying here for a while, but let's plant that seed of rental income. That's a possibility on there. So it's a great way to build long-term generational wealth for you and your family. Being a landlord, it's not the easiest thing in the world, but if you do it right, if you plan right, a lot of people benefit from that.
Absolutely. Absolutely. And again, it's using your resources. You know, we talked about this once before, partnering and aligning yourself with folks who are experts in their field, that you know that you can trust, are ethical and knowledgeable, and put a little more effort into educating themselves in their industry. And as you also mentioned, you know, if we don't know the answer, we at least know where to go to get the answer, and we can get that for you. So that strength and partnership goes a long way.
Yes, definitely. Who you work with matters. Can never say that enough on there. Veterans, service members, anybody looking to buy or sell a home, you want to be able to have someone that is responsive to you
Yes.
on there. And if you're getting, if you're a veteran, if you're getting a pre-approval, if you've got it from me, you know that I've checked your certificate of eligibility. If you're getting it from another lender, verify on that just to be sure. Because I'm telling you that, yes, I mean, I tell everybody anyway when we're talking, hey, I've already pulled it, but ask
Yes.
because the pre-approval means nothing without that certificate of eligibility.
That's right. And you, as the borrower, you have every right to ask that question and push for the answer and be confident in the answer that's given to you. That's what we're working for. We're working for you, and to be sure that you're confident and ready to move forward.
Absolutely.
Yeah. Well, very good. I think we've wrapped up some good information again here. Just talking about the ability to purchase multifamily units up to 4, correct?
Yes, generally speaking, there are exceptions on there,
Okay.
but just up to 4.
All right, fantastic. And then a property that may have an accessory dwelling unit. Again, I have to slow myself down.
Aluminum. Okay.
Yeah, we get used to those acronyms, and it's so much easier to roll that off of the tongue versus the whole phrase.
Yes.
So again, thank you, Don Warren with Southwest Funding. We ask that you please drop your questions and comments. Like and subscribe to follow for more, because there will be more. You can never put out too much information, good information for our borrowers, for our clients, and honestly, for our sellers as well. There's a lot of misinformation out there too, in regards to what that might look like for you as a seller to accept a VA offer and what the process is. But again, we'll cover that another time, no doubt about it. So like and subscribe. Look for the link that will allow you to schedule a time to chit chat and see if now is the right time for you to buy using your VA benefits. And we'll look forward to seeing y'all the next time. Thanks again, Don.
Thank you so much.
All right. Take care.